In this video, we'll look at 8 simple steps to become financially independent with minimal effort and without changing your actual job. Hi, it's Björn from Become Financially Independent, where I will help you to understand more about finance so you can make sound financial decisions by yourself. If you're new here, make sure to click that subscribe button, and all the links I mentioned in this video you can find in the description box below. Let's get started. First, before we start with the 8 steps, I want you to set up goals, what you want to achieve the next year, the next 5 years and the next 10 years financially wise. The second, try to find something where you are really good at and sell it so that we can generate more income. Let's start with the first step. Create a financial statement. I want you to grab a piece of paper or create an Excel spreadsheet or use an online application where you can write down all your income, your expenses, your assets and your liabilities for each month, as this is really important so that we have a financial overview of our finances. Okay, because normally we start here, for example, receiving our salary, and then normally we end here by end of the month. Okay, and that it's needed to be figured out why. So basically you do this by income plus your assets minus your expenses plus your liabilities, and the amount you see afterwards, that is basically your free money you have for investing afterwards. And why we want to invest our free money we earned? Because we want that the money is working for us. That is the main reason why we are doing all the 8 steps today. Okay? Because we want to use the compound interest. Another tip from my side. If you don't have it yet, please open a checking account and a savings account. The checking account is where probably your salary goes in or other money you receive, and you pay your expenses as well from it. And the free money you have by the end of the month, please transfer it to the savings account. And from there we can as well invest. Another tip would be, if you have credit cards and you constantly overcharging it and paying interests, maybe you want to get rid of the credit card, and instead of the credit card you can have a debit card. A debit card is a card which you can charge with a fixed amount of money each month, and when the money is out you cannot overcharge the card and therefore you don't pay interests. The second step is to analyze your account movement. Okay, so where your money comes in and where your money goes out. For example, your fixed expenses you have over the year. Try to make it monthly. Okay, so you have a better overview of your money. Second would be, if you have insurances, take a look at them and maybe you find already something cheaper and they have a better performance, so you can change them. Okay, the other things is like, check where your money goes. If you pay for restaurants, a gym or something else, and then you can evaluate what you're actually doing. So for example, if you pay each month or each week Starbucks coffee, okay, why you don't make a coffee at home which costs 50 cents, okay, and not $9? So that is what I mean by analyze your account movement, so that you see where your money goes. the third step. And I hope you still stick with me and watch the video until the end, so that you will see as well the other important steps. So, create a budget, important one. So what I want you to do is write down all your fixed costs, for example, your rent, your car, insurances, mobile and food, and what you have on monthly expenses, on clothes, restaurants. If you go to the gym to look like Arnold, then please write it down as well. The most important, what I want you to do is to create a budget for your savings. Means the maximum amount what you can put by side and save without drastically changing your life. On the fourth step, I want to talk about debts, because here we can save a lot of money as well. So if you created already debts because of getting commodities like you needed the last iPhone or you wanted a BMW instead of a Honda, then please pay them back as soon as possible, so that we pay the lowest fees on interests. However, if you're thinking about going to school again, or online courses, or investing in books so that you get smarter and that you can sell yourself afterwards for more money to generate more income, that I would say please go for it. Create a debt, get a credit or a loan and invest in yourself. It calls human capital, and afterwards you can make more money from it. The next one would be as well, like if you have loans for real estate, for example, if it is an investment, so you don't live in it, so you rent it to someone and it is an investment, you can do it as well, because this money is tax deductible. Okay? On the fifth step, I want to talk savings. That is right step before we are going to invest, and that is important. So what I want you to do is create an emergency fund. So when shit hits the fan, your car breaks down, whatever, your washing machine or stuff like that, that you have money to pay for it. All right? Don't invest all your savings you created by now and start to invest all of this. Okay? So have an emergency fund, and then you can start to invest. And that would be the next step. If you followed me until here, I hope you learned something new, and if so, please write it down in the comment box below. Let's start with the sixth step, investing. First recommendation from my side is, please do not use your house bank, because they are normally really expensive when it comes to investing, because you have to pay the people that do so for you, right? Instead, you can do it by yourself, and that is the good part on it. Look for the best or cheapest online broker you have available in your country and start investing from there, because they have way lower fees. And when you invest, diversify your investments as much as possible. For your stocks, for example, if you only want to invest in stocks, diversify them, not put everything on one horse. Instead, split your stocks. All right? You can as well invest next to stocks or bonds. It's a smart thing to do that you invest as well in commodities like gas, oil or gold, right? As well, have a certain amount on cash back home. If something goes down, etc., then you have something. Another would be that you invest in real estate or in peer-to-peer lending, P2P as they say. Or the next one I forgot to mention nowadays as well, in crypto. In the seventh step, let's talk about spending. What I want you to try is only spend 1 to 5% of your net income in things you want to buy for yourself, okay? And not more. The rest of the money, please use it to invest in yourself, okay? Buy books, go to an online campus and do things like this, which makes you smarter and you can make money with it. Because your biggest lever is your wisdom, which you can sell, okay? Which increases our income, and if we have more income, we have more money available to invest, okay? And that is the next step. The rest, what you have on money, please invest it, because we want that the money is working for us. We want to use the compound interests, okay? And the most important question of the day is, please ask yourself every time you buy something, does it bring any more value in my life? Okay? Think about it. Unfortunately, we cannot leave out the taxes, and therefore the eighth step, I recommend pay always your taxes. If not, it can be pretty painful and can cost you a lot if you don't do so. If there are simpler ones, you can do it either online or you can get an accountant if they are more complicated, right? And another thing is read books, search online, watch YouTube videos, do things like this, and try to find legal loopholes in order to pay less taxes. So we have what? More money to invest. That's all for today. I hope you enjoyed it, and start now. Let me know what was your favorite step, or if you have others, share it with the community in the comment box below. If you liked the video, please give it a thumbs up, stay focused and don't get greedy. See you next time.